Good evening, everybody. Is that you, Dr. Rossway? Long time no see. All right. All right, we'll get started. My big dilemma the other day was I bought a load of firewood because we were having 0-degree temperature here and everybody was sold out of firewood. So when they delivered the load of firewood, which comes now in big white bags, that wood wouldn't burn if you put a blowtorch on it. So I called up around for another 30 minutes and finally found another group that had wood. That's right. The Indians get from the Indians. So they said, yeah, they deliver firewood. And I called back to the original group just to kind of complain, figuring they weren't going to do anything about it. And so after I called them back, they said, oh, sure, we'll come and pick it up. And we must have picked it up off the log. So now I got lots of firewood. It made me so happy because it was cold and wintry. Right now it's about 56 degrees and raining. So Victor, this is the right screen. Yes. You should be seeing the Dow. Jamie, I'm having a hard time even just moving this wood from on the lawn where they dumped it underneath the porch where I could stack it. Just getting too old. Yes, it's going to get cold again. All right, we're going to kind of work a little bit backwards tonight. We're going to have a training session at the end of the month on the 27th. It's probably, I think Pat's promoting it that it's going to be a 4-hour session. More than likely, it's going to be 6 hours. But we're going to kind of go up the scale a little bit. For me, the most profitable and most common sense investment strategy or technique is candlesticks. It tells you exactly what's going on in investor sentiment. Then the next step is, if I put them in category, I put them in steps. That step number 2 is learning a good trading technique, which again, I think candlesticks is the best. It's turned me around 180 degrees. The next step is once you learn a good trading strategy, you want to be able to use it to where you can keep your emotions out of your trading, which is also a major benefit of candlesticks. That the common sense probabilities tell you when you're probably going to be in the right direction at the right time. But so that'd be step number 3. Step number 1 is what most people skip when they get ready to invest, which is learning what you need to know for successful investing. And that includes things like knowing that you're going to take losses. Most people don't even comprehend that they're going to take losses. And I'm still talking from, I say most people, my experience. When I was ready to invest, my brilliant analytical mind was going to find the best trades and I was going to make lots of money. What I learned was that what you think is the right thing to do most of the time is exactly the opposite. So we're going to be doing a session on what I call getting mentally prepared to be mentally prepared. What you should be getting in your head before you even start out on a trading program. So we're going to kind of look at some of that stuff tonight mixed in here. So we're going to go a little bit backwards. First, let's take a look at the markets. Obviously, step one of any analysis is there a trend? We can see for the past year there's been a trend in the market. That's why I kind of chuckle when I hear all these analysts say, "Oh, we've been out of the market. We're waiting for it to pull back." And I'm thinking, all right, why were you out of the market? Why were you waiting for it to pull back? Because you thought you were a little bit smarter than the market. There's only one correct analysis of the market, and that is the market itself. If anybody that thought they should take profits when the market went from 18,000 to 20,000 was making a preconceived judgment of that's where it was going to sell off. Or was it going to sell off at 21,000, 23,000, 25,000? Nobody knows. That's why that number or that basic parameter that the Japanese race traders use is let the market tell you what the market is doing. It doesn't make us a hill of beans of money to try to project where the market's going. Nobody has ever, and I think I was telling the chat room today that if you found an analyst that at the beginning of this year had projected that the market was going to finish up pretty close to 25,000, they were probably 1 in 100. And I could bet you dime to donuts that if you took all those same people's projections for what was going to happen next year, probably one person would be correct, and it wouldn't have been the person that was correct the previous year. So it's basically, what is the market, nobody can analyze what the market's going to do. Another good facet today, or a warning today, was the transportation index. Where does it start? When things get exuberant at the bottom of a trend, breakout. Where do you start watching for selling? When things get exuberant at the high end of the trend. And the NASDAQ. Kind of the same criteria, just steady uptrend. Whoops. So these are the type of markets where you want to make hay while the sun shines. Now, I was also putting into kind of an analysis today that if you've got stocks that have just been moving steadily, I mean, you should be happier than a pig in doo-doo that you found one that's or 4 or 5 out of the 10 positions you might have on that are steady eddies that only have one criteria. You stay long until you see a sell signal and a close below the T line. When you get a few of those, and I'm trying to think of which ones, tech is another one. I've got 3 or 4 that have been doing that. Anyways, if you've got 4 or 5 steady eddies in your portfolio that are moving up maybe 1%, 2%, 1.5% each day, a lot of people have a hard time making money because they might have 10 positions on, but they'll have 6 that are making money and 4 that aren't making money. And what's the usual criteria? Jamie, yes, we'll get back to this one. Looks like when they gap it up in the overbought conditions, start getting ready to take profits. But that's going to be what we go into here yeah, we call them a 45-degree, Sophie, or a steady eddy, where they consistently stay above the T line. Yeah, I'm sure there's different ETFs, John, that you can be buying in specific that are oriented towards specific transportation. But what I found is most people, if they've got, I say most people, A lot of people will have, in a market like this, they'll have 6 stocks that are going up, and maybe three of them are down, one is flat. And they're saying, man, this market is great, yet I'm not making that much money. So what do? When they decide to sell off one of their winners, they sell off one of their losers just to offset the gains. And what's their hope? That they can take those funds and put them back into something where they have 2 winners. Well, when you keep doing that, that's why people don't ever get anywhere as far as making big money in the market. Instead of analyzing whether you've got something that is not working, instead of sitting there hoping that it's going to turn around and head up like the rest of them, you close it out based upon what the charts are telling you and move on to the next, move on to something that's going to make you some good money. So there are 2 things that we have as far as great advantages, knowing what the patterns are supposed to be telling us or showing us based upon their historic record. People were asking about PRGS today, whether they should be buying it. And the answer is no. The fry pan bottom was told you when to be buying. When you started getting back up into this area, that's where you wanted to be buying. This is the result that you're looking for. So we're buying things that give us a high probability of moving in the right direction. Now, are they always going to move in the right direction with a big price move? We started picking up EXXI early this morning because you can see obviously what was happening. Let me see if I can. Is that the right one? Yes. You can see what was happening. You were setting up a J-hook pattern that was using the 50-day moving average and the T-line as a support level. So what were the probabilities? Probabilities were if they opened it positive, they were probably trading positive. So the rhetorical question I always ask is, are we always going to get a 15, 17% move when a pattern breaks out? Definitely not. What will happen, though, is we will be put into positions where the probabilities of situations where there is a 17% move, more than likely, if we're trading off a pattern, we've got a much higher probability of being in one of those. I'm just going to look real quick on Omar. No, not really. Nothing yet to show you there's any dynamic move there. So let me go through this. One of the aspects of successful investing is knowing what patterns to be looking for. If you were buying down here on the breakout, where was your first target? The 50. If it went through the 50, where was your next target? The 200. If it did this type of pattern at the 200, what was that telling you? That you were in a J-hook pattern, there was still more upside. So essentially knowing what should occur after each trade gives us a much higher probability of knowing what positions to go after based upon what their high probability or what their probability results are going to be. So we went after NKTR. Well, he actually put a buy recommendation with yesterday, and it did a doji. But it's still set up for the possibility of a doji sandwich today. So the simple criteria. Oh, on once? Okay, let me take a look. The criteria was if it opened positive, what was our potential trade? A doji sandwich, the same magnitude as this. If it didn't work, then what did we have as the next analysis? That we were still in a 45-degree from this best friend signal. All right, we'll hold off on the individual ones, but I will tell you that does have the prospects of, yes, a J-hook pattern. Just because you can see what's happening down here, a morning star type signal. So if you're buying this one on positive trading, your probabilities are that it's heading up. Then you can calculate where your targets are, whether it's the 50 or fill in the gap at the 200. When I get out of a failing position, I forget to come back in. This is a bookkeeping problem. Any suggestions? Carol, I've got watch lists. I've got watch lists of the stocks that I'm basically watching. Obviously, that's why you call it a watch list. And then I've got the positions that I'm in. So if I come out of a position, I keep it on that list because a lot of times, I'll answer that question, but I keep it on the list for a few days to see if it's going to start coming back, and I've got some examples of that. Paulette, no. Remember, today EXXI just started the breakout. So what do we expect coming out of a fry pan bottom? A strong price move. So I wouldn't be afraid to be buying this one on positive trading. No, volume makes very little difference. Remember, we're not buying volume. Volume is just an added fluff. That if you see a reversal signal, let's say a reversal signal right here, and you have huge volume, that's just that much more credibility or credence to that being a reversal because you know that a lot of stock changed hands that day. Yes, this is Moneyball. This is being recorded. Rick is recording it for us tonight. Yeah, there's two different criteria on that, Tim and Carol. Sometimes you come out of a position and you don't come back in it because the benefit we have with the simplicity of analyzing the signals and patterns is that if we come out of this position and we don't get back in it, it's because we moved someplace that had another buy signal. So the regret is, we missed this move. But the benefit is, more than likely, whatever you went into still has the probabilities that it was moving up, but it's probably moving up from a better place where you were in the oversold area someplace with a buy signal versus being up toward the overbought area. Hold on to your individuals. We got a lot of stuff here. I got good stuff to show people. I want to make sure I do it. So here's another case where if you were long this or thinking of going long this, notice every time it does a buy signal, it pops up. It did a bullish engulfing signal yesterday when the market was down a wee little bit. If it opened positive today, what was it telling us? It was confirming that they were staying above the T line. Yeah, I'm going to give you the good stuff. Tom, yes. The positive trading is kind of a combination that we don't want to wake up tomorrow looking for a stock that we're ready to buy on positive trading. So, and it doesn't open positive, meaning it opens lower, or it opens positive, but the market in general, let's say we wake up and the pre-market futures show that the Dow is going to open up down 90 points. Well, that's telling me that there's not a lot of buying right on the get-go, so I might hold off for a little bit. On the other hand, if we think the market is still heading in an uptrend and we wake up and it shows the pre-market futures are showing the Dow is going to open up another 30 points and the stock you're looking at looks like it's opening flat or positive, yeah, that's a positive trading. What is the good stuff, Diana? This is the good stuff. We're going to go through the good stuff. So we're looking for those setups. Again, today's setup early was knowing that if we had a J-hook pattern, if it opened positive, it should be trading positive. And if it broke out through this level, what was it telling us? We had a we were heading in the right direction. We wanted to be in that move. Now, once again, all we're doing is we're buying things that is showing what investor sentiment is building up steam, and the J-hook pattern is one of them. We don't always get a 17% move, but we put ourselves in positions where the probabilities are that much greater of being in something that is going to be moving in the right direction. CRR, we're in this one. Why? Because the fry pan bottom. Then look at the buying that occurred right here on the T-line again. So what's our setup? Well, if this opens positive, what's that telling us? We probably got a J-hook pattern in progress. So we can analyze. Joe, I bought it, I think it was about 10 minutes after the market opened. Because it was confirming. Oh, I think I bought it just as it came up through the high of the previous day, because that was confirmation that they were still buying. Oh, no, it's not anything, what do I say? Wasn't anything extravagant. It's just that if you know what patterns to look for, which this is why we're here, yeah, you're just putting yourself in the right position at the right time. Now, on the other hand, we also know what should happen if it opened up positive and then traded back down here. That told us they weren't breaking out. You close out the position. That's that proverbial advice that most money managers give everybody, which is cut your losses short and let your profits run, but they never give you a method for cutting your losses short and letting your profits run. Candlestick analysis is very simple. Everything that is based upon common sense investor perspectives that the Japanese rice traders have analyzed for around 400 years is knowing what usually happens in investor sentiment. So part of successful investing is knowing your patterns and what your setups are going to be. So coming right back in there. Got a little Morningstar signal. We're starting to curl up. If it opens positive, what's it telling us? Number one, it's confirming our Morningstar signal that bounced off the T-line. And two, it's telling us this area is probably not acting as a resistance. We've probably got some good running room. Square, kind of the same thing. We saw when it reversed, the Morningstar signal, up through the T-line, breaking through this. And then notice what happened on this spot right here. This is where you can make good money even if you're a day trader. But if you see a doji and your stochastics are still coming up, and you see a doji right on a major resistance level like the 50-day moving average, and we know what the simple rule of the doji is, if it opens positive, more than likely it's going to trade positive. And if it does trade positive, it's more than likely going to do a doji sandwich, which means the trading magnitude that day is going to be the same as this candle here. And it's telling us that the 50 is not acting as a resistance. That puts you in a high probability trade setup, putting you in the right direction at the right time. So even if you're a day trader, you're looking at lower risk, or at least know what the probabilities are that if it opens positive, it's going to trade positive that day. Fossil. You can see the little cup and handle type pattern here. Once again, if it opens positive tomorrow, what's it telling us? They're breaking out, and where's your next target? Probably the 200-day moving average. So essentially, since human nature does the same thing time after time, we can see the J-hook type pattern supported on the 50. Did a doji today. What do we want to see tomorrow if we want to buy this? We want to see it open positive. That would tell us we got a high probability that it's going up further. Hi, Chicken Hawk. Haven't seen you for for a long time. All right, well, good. CVRR, what's setting up? Kind of our classic pattern, which is a fry pan bottom. What do we expect coming out of a fry pan bottom? A very strong price move. And then notice when it pulled back to the T-line, very indecisive. Doji, doji, spinning top, hammer, doji, bullish confirmation. What's that setting up? A J-hook pattern. What do we call the classic? A fry pan bottom that produces a strong price move. When it consolidates, we can tell whether it's consolidating or selling off. In this case, we knew it was consolidating because there was no real definite selling, indecisive selling. So very simple trade. We can be buying on positive trading tomorrow. What's our first criteria? See if it can get out through this level. If it does, what do we expect? The J-hook pattern, wave 1 and wave 3 should be about the same. So the target, Bob, would be kind of take it from here to there, whatever that is, 5 points. 5 points from here takes you up almost to the $22 range. Okay, stock are negative. I don't know. So when I look at stocks every day, it takes not very long each day, probably less than 10 minutes, to find the best charts. There's our slow curve breakout. Where do you think when this broke out, the next target's going to be? The 200. But when you start seeing something like this, that slow curve, you know if they break out, it's going to be a good, strong price move. So you can also use, notice what happened right here at the 200. There's your doji sandwich. When it opened positive the next day, it opened right on the 200 and went positive. What'd that tell us about this signal or pattern? That more than likely we have a doji sandwich telling us that this resistance level is not acting as resistance, and the magnitude of this candle right here is probably going to be equivalent to this candle right here. And then what becomes our criteria after that? You just stay long until the very simple rule of you stay long until you see a sell signal and a close back below the T line. Just that little parameter right there keeps you from having to worry each night when you go to bed whether it's time to get out or not. The chart will tell you when it's time to get out. When there is no real resistance above the candle's recent move, to use the wave 1, wave 2 idea. Well, if it's a pattern, such as a J-hook, usually wave 1 and wave 3 will be approximately the same. Now, I say approximately. That's what usually happens. But it comes down to the most specific criteria. When do you sell? When you see a sell signal and it confirms. Sometimes that's when you start moving too far away from the T line. And we'll get to that here in a minute. The waves all have J-hooks? No. J-hook is something where you can see the pullback based upon the candlestick formations are relatively indecisive. Let's see. When you're trading options, in this case, how do you operate? Rolling over the options. Salam, we're going to do a member session probably next Wednesday night where we'll go into that, how to trade options against your candlestick charts. Now, obviously, you're buying the candlestick chart. Options are just the method to do it. So what we want to do is figure out the best method for the amount of time we have left between now and whatever expiration date or the time frame we have left. So I think Wednesday night we'll be doing a free session for members on how to use spreads, why spreads are advantageous. Now, I don't use all the other, I guess what I would call sophisticated option trading methods, like the condor or the butterfly, all those type of things. I don't want to spend all night trying to calculate what trades to do. I try to keep them simple. I'm either buying or selling the calls and puts, or I'm figuring out the best spread to take advantage of that trade. And that's what we'll go through on Wednesday night for members. Yeah, that'll be for everybody. Let's see, what was I doing? That's a J-hook pattern. Whoever asked that. You can see when they pulled it back right to the T line and then did a buy signal. You have wave 1, wave 2, going into wave 3. How big is wave 3? Well, if you can calculate, this went from 13 to 21, 8 points. Look for it to head up to about the $28 range. Jason will have, I think since it's members, it won't matter. You'll already be in. Do you buy on positive trading or wait for the breakout? You've got two methods. If you are confident that this is going to be a J-hook pattern, you can see this is kind of a morning star signal. Big down day, 2 days of indecision. Then the next day, big, coming back up more than halfway through that candle, doing a morning star off the T line. That you can, if you're aggressive, you buy right here. So what's your first criteria? You want to see what happens once it gets here. If it does a shooting star and backs off, it tells you have a double top. If it goes through, tells you stay in the position and look for wave 3 to occur. Let's see, who was asking, would you like to get scan for J-hook? Would also, Gwen, if you're in the chat room during the day, just ask somebody for that. Everybody's got that formula, and it's somewhere on our site. If worst comes to worst, just email Abraham at candlestickforum.com and he'll get you the link. So if you bought on positive trading and it backs off, you get out immediately. Yes, I want to see it get up through here. If it opens tomorrow and closes down here, that's kind of negating what I expect it to do. Because what do we expect from this J-hook pattern for it to go in this direction? If it does a bearish engulfing signal here, then what do we probably have? Probably a drifting sideways trend channel. It's not going to be a strong trade. Wayfair. Observe the obvious. Wave 1, wave 2. Look at the indecisive trading here. Doji, hammer, bullish confirmation. And what did it do today? It broke out of this range, telling us we're probably in wave 3. So back to let your profits run and cut your losses short. How do you do that? Because we know what to expect coming out of this pattern. Wave 3. What would tell us that wave 3 is not working? If it opened up tomorrow and then closed back in this area, what did that tell us about our breakout? It wasn't there. Get right back out of the trade. What time frame of your typical chart? Chuck, that is based upon each individual's trading habit. If you're a day trader, when I'm trading things like crude oil, which I'll take a look at right now, you can see what's happened to crude oil. I might trade crude oil off a 10-minute chart. Now, each chart will look exactly the same. That's a 10-minute chart. Same criteria, the 200, the 50, and the 34, and the T-line. So as you can see right now on the 10-minute chart of crude oil, if I was trading this, I'd probably be a buyer of this. Because you can see the fry pan bottom. up through the T line, up through the 200. Where's the next target? Watch to see if they pop it back up here. So what we're looking at right now are daily charts, but each chart looks exactly the same. This is your 10-minute chart. There's your 5-minute chart, big fry pan bottom. If I'm getting ready to buy right now, I can flip down to my 1-minute chart. Whoops, my 1-minute chart has broken out and backed off, but it looks like they're buying. If I see some more buying, then I'd start buying because that tells me the breakout is still working. I don't want to do that. So you can analyze anything. A lot of people ask me, well, can you trade Forex? Can you trade Asian stocks? Can you trade? You can trade anything. Candlestick analysis is merely the graphic depiction of what's going on in human nature. Doesn't matter whether you're trading stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it. Tim, not before the market opens. Usually after the market opens, I want to see what they're doing. Okay, here we go. So you can see what's happening in crude oil ever since it broke out of this trading range. And this candle told us right here that it wasn't indecisive right here. They went right through it. Gold, you can see the J-hook pattern setting up in gold. And where did the J-hook pattern start? Bouncing up off the T line. What's the prerequisite for a J-hook pattern? A strong price move. Consolidation. If I was going to be a buyer of gold, I'd be buying if I saw more strength right in this area, telling me they're confirming the J-hook. How do you determine your stops? If I've got something that is acting well, like a steady eddy, each day I say, all right, say if we cut the chart off right there, where would I not want to see this trade? Don't want to see it trade back below this area. So I put a stop right there. Same scenario up here. Still put my stop below the T line. It shouldn't come back down through there. Where's my stop right now? Right below the T line. I'm skipping steps here. But tech, where do most people buy? This is the basic of human nature. They usually buy exuberantly in the top. Where the most people sell, they panic sell at the bottom. That's what the Japanese race traders will indicate for you. So this was a nice steady eddy ever since it broke out from around this range. Look at our bullish flutter kicker. Bullish flutter kicker is a very strong signal because it opened here and closed here. The next day they gapped it up and did a doji. But where did they do it? Above the previous day's open. That told you there was some good strength coming in, but it did a doji. That wasn't very decisive. But what's our simple rule of the doji? They're going to move in the direction of how they open after the doji. So if they open it positive, what do we know is going to happen? It's going to go positive. So we have a green candle. We have a red candle. If you took out this little flutter, you basically have a kicker signal, which is your strongest signal. So keep your stop just below the T line. But now look what's happening. Nice steady move up, big move, more big move. And then today they gapped it up. So what are the warning signs here? First, you're starting to see exuberant buying. Secondly, part of that exuberant buying is the gap up in the overbought condition. And third, what does that do to your T line? Look how far away you're moving from the T line. So where's your safety stop now? Well, if you put it right here, you'd be giving up a good percentage, about a 10% move. Where would it tell you that the bears have taken control? You put your stop right here, just below today's low. No, that's not a, if you're looking at this one, no, that's not a flutter kicker. That's your doji sandwich. Remember, a flutter kicker is a dark candle, a red candle, a gap up doji, and then a green candle going the opposite direction. So the warning right now is, where do most people buy? Human nature says they buy exuberantly at the top. When you see a gap up in the overbought condition, there's one thing that you should be mentally prepared to do immediately. Start watching for a reversal. So they kept it going up today, but as a safety stop, put your safety stop right here, because what's the logic of that? They opened this positive, and then they are able to come all the way down through there. Who do you think's been taking control? The sellers are starting to take control. You want to be out of that trade. What did I just do? Tech. What was I doing? I forgot. No, we did Wayfair breaking out. Sanchez. This is one of those where you get, notice this is what we call the bobble pattern. You can see it's kind of a J-hook pattern with one more defining feature, which is it failed the first time. Oh, pshaw. Right here at the 200. How did we know it failed? Because it did a shooting star in the overbought condition, just touching the 200. We're starting to take profits in here. Now it comes right back up, and it closed right on the 200. What's it telling us if it opens positive tomorrow? That the resistance level is not acting as resistance, and it's confirming our J-hook pattern, which is more defined because we can see it's a bobble pattern. That if you took out the 200, you got a J-hook pattern. The fact that we saw that it failed at the 200 and now coming up through the 200 tells us where's our next likely target. I don't know. Probably wave 1, wave 3, bringing you up into this range someplace. Oh boy, trend trader. I don't know. I think you have to right click right on the one of the candlestick signals, and it gives you a drop down to make it whatever color. Okay, so the other side is, when do you get out of a position? Well, look, mid was a very good trade for us. Again, look what happened right here. There was our bobble. So if you were long from here, down in this range, you wanted to see what would happen at the 50. At the 50, they told us they weren't stopping there. Where's your next target? Up here. Where were you taking profits? On the bearish engulfing signal, telling you again they weren't going through the 200. But what was our criteria that told us to keep watch of this one? The reason I'm showing this is because if I was somehow fortunate enough to ever get into a good trade before candlesticks came along, and I took profits here and they started back up, my first thought was, they're not going to trick me. They're not going to get me back in and turn it right around and take some more of my profits from me. But now I know what a pattern looks like. A bobble, J-hook pattern. So if I'm selling here or even selling on this day, I'm buying back here because I can see the pattern set up. When do I start looking for a sell signal? Well, wave 1 and wave 3 should be about the same. When do I take my profits? When I see sell signals and a close below the T line. So again, where do you get out of trades? When you can see there's been a change of investor sentiment. There was our kicker signal. There was our bearish engulfing signal. And where did it occur? Up here in the overbought area. In a case like this, if I'm in an overbought area and I see a sell signal, the worst case scenario will be I'll sell half the position. Why do I do that? Because of our egos. What if I sell here and then it opens up positive and goes up positive? Well, if it continues to go positive, I'm in a high-risk situation where now I'm in an overbought condition and I started seeing sell signals. Worst case scenario is I sell half here and it opens lower. I sell the other half. All right, my average sell cost was, or sell price was right in here. But what told me to start taking profits? The very basic bread and butter of candlesticks. A bearish engulfing signal, one of the 12 major signals. So when I can take a look, we made very good money on this trade. But what was the warning here on this day? Look how far away we are from the T-line, number one. Number two, how did we get there? With a gap up. So this is one of the things we're going to be teaching. How do we keep from giving back all our profits from up here? Because we already have the acknowledgement that we've gapped up in the overbought condition and we're a heck of a long ways away from the T-line. Let's see if I can find this. I think this was it. That if they open it up and it's still going up, but you know you're a heck of a long ways from the daily T-line and you see your 10-minute chart, you start taking profits here. Yes, that exhaustion gap, again, part of that, where do most people buy? They buy exuberantly at the top. So when I know I'm that far away on the daily, I flip to my 10-minute chart and tell me when it's time to start coming out. Oops. No, that's not what I want. That allows you to take profits up here with the warning signs that you're that far away from the T-line and you've gapped up. So part of successful investing is not only analyzing what your signals and patterns are telling you, but where those signals and patterns are occurring. Here's kind of the same scenario. You're in an uptrend. Let's get rid of this. I don't know how to get rid of that. Oh, for crying out loud. Just very simple logic. If you're in the overbought condition and they gap it down to where they're playing with the open of the previous day and you're that far away from the T-line, get ready, put your sell stop right here at the previous day's open. Because logic says if you're in an uptrend in the overbought area and there's enough selling pressure to come down through that level, where do you think their first target's going to be? Back to the T-line. When do you buy it back? If you see another buy signal and they do a J-hook pattern. In this case, you were out right here, and you'd be glad that you were out right there. IMMR, same scenario. Anytime you see a doji, the Japanese race traders say, take heed. Oh, mercy sakes, it's already 10 to 9, and we're not halfway through. All right, you better all look up your Domino's or your Pizza Hut. Better order in. It's still going to be here for a while. So if you're up here, you see a doji, stochastics just up in the overbought area. What's the visual criteria that will also help you out on this? Look where that doji occurred. Right smack dab at the same level it peaked out before. So where's the safest place to put your sell stop? At the low of the doji. If it has enough strength to come back down through that level, it's telling you the sellers are in control after a doji. That's where you close out your position. Yes, Richard. So again, this is just common sense. A lot of people say, well, I had a money manager tell me that if I'm down 3%, 5%, 6%, 8% on a trade, close out the trade. There's only one thing wrong with the criteria, that criteria. The market doesn't give a hoot where you bought. So it doesn't give a hoot where you want to sell. important criteria is, where is there a definite change of investor sentiment? That's right. John's saying that if you sell and it turns around, you can always buy back. You're not trying to maximize your profit on every single trade. You're not trying to buy at the absolute low or sell at the absolute top. If you can keep getting the profitable trade, high probability area in the middle, the better your correct trade ratio, the higher your compounding effect's going to be. And it's going to be a heck of a lot bigger profits to your account versus trying to clip off the top and clip buy at the bottom and clip off the top. Same scenario here. Here's your sell signal, a dark cloud. Anytime you see a gap up in the overbought condition, very simple sell strategy. If it starts trading positive after gapping up in the overbought condition, immediately put your stop just below where it opened. Logic says if they're taking it up and something good's happened, you don't have to worry about it. They're going higher. But if they've gapped it up in the overbought condition and then start bringing it back down through the open, that's telling you the sellers are starting to take control, close out your position. If they gap it up and immediately start selling it off, put your stop at the previous day's close, because logic says if they start selling off down through that level, the sellers are in control. If you're in an overbought condition and you've moved that far away from the T-line and it didn't show any selling that previous day, put your safety stop right here. Logic says if they come back down through there, where's your first target? Back to the T-line. I don't know what's happened to you, Diana. Do you wait after the first few minutes of the market? If the market is opening up and it looks like they're starting to roar it, I'll probably buy within the first 90 seconds. Otherwise, I'll wait 3 minutes, 5 minutes, see what they're actually doing. WABA, that was kind of the criteria here. That you look how far away you were from the T-line. Just as a safety stop, you put your sell stop right here. Because if it's a good trade, it's going to continue higher. But notice they gapped it down and immediately went down through this level. Where was the first target? All the way down here, practically the T-line and back up again. What's the worst case scenario? If it opens positive, you can always buy back in. What don't you want to see if you're bullish or if you held on that day? You don't want to see them open a lower and trade lower. That tells you the sellers are still in control. Okay, let's take a look at some of the biggies. Netflix. The Doji sandwich breakout. What's been the criteria ever since then? They haven't been able to close it below the T-line. They actually opened it right near the T-line yesterday and brought it right back up. Amazon, when they broke out through this level, there's kind of your slow curve. What's the criteria? They haven't been able to close it below the T-line. Tesla. The bigger the move, the more compelling there's been a change of investor sentiment. You stay long on this until you see a confirmed sell signal. Nvidia. Stay long. It also opened lower yesterday and came right back up again. Apple is probably the worst of the charts right now. Just no real direction. So what do you want to watch here? You want to watch to see what happens when they come up through this level. But right now, if you're long, you just watch to see what happens when it gets here. Yes, I see what Chicken Hawk is saying. It is practicing. Investing is just the same, and I use the example of the every spring training, the pitchers come off the mound after somebody's bunted it down the first baseline. They know how to come in behind the ball, pick it up, and throw it down to the first baseman. Now, they're professional baseball players. They have done that, practiced that play probably thousands of times, but they still practice it. So it's right there in their muscle and mindset to know exactly what to do. That's why you've always got to keep practicing and keep reminding yourself what the good trades are, which again is part of our training, being mentally prepared to be mentally prepared. One of the first things that we tell people is you have a journal next to your screen at the desk. And every day you write down what you did wrong and what you did right. You write down what you did wrong because if you were like me before I started keeping a journal, I would say, man, I'm not going to do that again. That was stupid. Well, the reason we did it in the first place is because that's what human nature usually tells us to do, and we're going to do it again. And I discovered that maybe it would take me 10 times to do that stupid mistake before it started to sink in that I shouldn't be doing that. Well, I discovered that if I wrote it down in a journal, and at the end of a couple weeks, I went back through and read each time I did that mistake, I was much less apt to do that mistake again because of the fear factor. The fear factor is, what if somebody picked up that journal someday and saw that I wrote down, put in a cell stop. You should have had a cell stop in. And 3 days later, I had written down, put in a cell stop. It was a little bit more bolder and with maybe an exclamation mark behind it. And then 3 days later, I wrote down in much harder pressed writing, put in a cell stop. My biggest fear would be that if somebody ever picked up that journal and said, what was wrong with this guy? He knew he should put in a cell stop and he still wouldn't do it. So I teach myself pretty much faster to do what I need to do to make sure I don't do that mistake again. That's right, neon highlighter. Okay, so here's some of the positions. Look at this one, OTC, OTIC, J-hook pattern setting up. And where is it setting up? Kind of right in here, breaking out today. Tells me little J-hook pattern, you could be buying this one. We recommended this one today on positive trading. Tech, we looked at. Tech, we've got our sell stop right here. We're making very good money with it, but we want to protect ourselves and make sure we don't give it. Oops, I brought up Labu. Didn't say anything. Labu, J-hook pattern. It's just about ready to break out through here. Now, it may not be the best chart trade, but it's pretty much telling you there's some biotechs that probably have good-looking charts based upon Labu trading strong. You can see which direction overstock is moving. As long as it stays above the T-line, you can stay long. You don't want to see this one open lower because what's our simple rule of the doji? They're going to move it in the direction of how they open after a doji. So it needs to open positive and trade positive. The charts are magnified and larger than when Sophie, I don't know what happened. The oil stocks are doing well. There's a nice fry pan bottom on NS. Where's the next possible target? Up to the 200-day moving average. Whiting, same scenario. Nice steady uptrend. You stay long until you see a sell signal. And Splunk, you stay long until you see sell signal and a close below the T line. Notice our slow curve breakout. You can see the wedge formation. I can draw the wedge formation. You kind of see the wedge, and they broke it out. So now it's our next criteria. You just stay long as it stays above the T line. Pod broke out the other day with your best friend signal. What'd that tell us? It told us that they've got a new dynamic. They've broken out through this level. Now you look for at least a 45 degree off of here. The moving averages are the 200 and the 50 are simple moving averages. That's the moving averages that every major money manager in the world has on their charts. We also have the 34 EMA that I recently substituted that back instead of the 20 because that I remembered in the past that works relatively effectively. Then the most important one is the black line, which is the 8 exponential moving average, the T line. Hudson, we were buying this one because of the fry pan bottom, and we're getting pretty close to the breakout levels. Now we're watching to see if they can break out through this area. If they do, you've got a gap area up here, right back to the 200-day moving average. GCO, you definitely want to be buying this one on positive trading tomorrow. There's your bobble breakout. Expect at least this magnitude move on the next move. Doesn't the 21 EMA act like a reversion to the mean? Oh, those are bigger words than I've ever used. We used to have the 20 simple on here, but the 20 simple usually went along, didn't become relevant unless you had a good, strong, steady uptrend for a while. The 34 is the exponential moving average. And ANAB is one that I didn't get a full position, so I kept thinking I better close and move to something else. But notice what's happened ever since we bought it. It hasn't been able to close below the T line. But now look what's happened. Look at the big move in the overbought condition. We're watching to see if we get a sell signal. If we do, that told us this was the exuberant buying at the top, or whether we're going to continue in a 45 degree from here. And what else do we have? TRVG was one that broke out the other day. You can see the pattern, the big fry pan bottom. And it pulled back after the breakout, but notice what it did on the pullback. Very indecisive until today. That makes our next likely target up here to fill the gap at the $10 range. So owning this one right in here at about $7.75, going to, say, the $11 area, it's a good 50% upside. Would you have not sold it when it came down through yesterday's close? No. What was the sell signal yesterday? Or what was the sell signal today? No sell signal. Just a down day and an uptrend so far. Overstock. All you can do right now, you can observe the obvious, which is, which way is this one moving? It's got a nice steady uptrend, and it's right now trading above the T line. But it has to open positive tomorrow to stay above the T line, because our simple rule of the doji says if it opens lower, which way is it going to trade? It's going to trade lower, which means Now you've hit the top of the trend channel. You might be coming back down to the bottom of the trend channel somewhere in here. So you want to see this trade positive tomorrow. I thought exuberance from the T line and overbought. Marshall, which one was that on? Oh, ANAB? Yeah, but you're not hellaciously away from the T line. I mean, that is a good distance away from the T line. This is still just kind of in the trend channel. Hold on to your individual ones. I've only got a few more. And then when I tell Rick to do the double line, you can put in, we're only going to have time. Well, it's already after 9. We're going to have time for each person doing one request. SPWR. Remember the simple analysis that the bigger the signal, the more compelling there's been a change of investor sentiment. And you can see what this one has done. A big Morningstar signal off the 50 through the T line, and you're right here at this breakout level. If it opens positive tomorrow, you can be a buyer of this one. It's breaking into a new territory. NKTR, still want to look at this one. This one still has the potential of doing a double doji sandwich, which meant two dojis before the next one. The worst case scenario is you probably should be looking at a 45-degree coming off of here. We looked at Square. Square's setting up nicely. CNET is for the big or active trader. You can see the big breakout. You can see they've pulled back to the T line. You can be buying this one on positive trading. Now, the chart tells you shows you a J-hook pattern, but look at the relevancy of this right here. This traded at $1.30 for months. Then something has happened that's got new interest in there. Gwen, yes, and that's what we're going to be also going into in our training, that maybe you only want to learn 3 patterns. If I was going to learn 3 patterns or get good at 3 patterns, it would be the best friend. Oh. Chalmers. The best friend, J-hook pattern, and the fry pan bottom breakout. Okay, look at Chalmers. You can see where there's kind of a resistance level. Then you had a bullish engulfing signal, bullish confirmation up through the T line, the 50 and the 34. That tells us we should be looking at wave 3. That's right. Oh, what was the other one that, was Kodak. Was going to, well, for crying out loud, what's happening here? K-O-D-K S dot K-O-D-K. That's not coming up for some reason. AUPH, something's happened. There we go. Observe the obvious. There's your bobble breakout. When would you buy this one? If you see it open positive tomorrow, you start buying immediately because you know your bobble breakout is occurring, and you know that if it's going to confirm the positive open after a doji, that you've got a high probability trade, and then what becomes your next likely target after consolidating here at the 50, up here at the 200. Let's see if I can get it over here now. Huh. Wrong there. Well, 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 well. Melly, another one that if it opens positive after the doji's breaking out through here, telling you your uptrend's in progress. What is your signal for going short? Mike, there's 12 major signals. Out of the 50 or 60 candlestick signals through the years, I've narrowed it down to 12 major signals. Those are the ones that not only occur most often, like 99.99% of the time, but they're the strong ones. The other ones, I tell people, you don't need to learn. You don't need to spend your mental time and energy trying to learn the other ones. If you learn the 12 major signals, and they're the opposite of the, something has happened here that is not right. What's happening? ROKU. Unknown token. This is not going to be good. Huh. I must have hit something. Oh, how does that happen? There we go. Now I forgot where I was. Yeah, so there's 12 major signals, 6 longs and 6 shorts. We're still short Roku because of the bearish flutter kicker signal. Where's the likely target? The 50-day moving average. So here's your best friend signal to the upside. When you can see that to the downside. Okay. And one more. First Solar. There's your slow curve breakout. And where did it break out? This is why the visuals of candlesticks and knowing what type of signals to look for make it a heck of a lot easier to see wedge formations and know what type of signals should. There's your little best friend, doji gap up out of that range. Doji, you might have another move like this. Yeah, I had something on here. Oh, I know what it was. For some reason, my Dragon Naturally Speaking microphone went on, so that was goofing everything up. Okay. Are there any general questions on candlesticks that I didn't? Yeah, there you saw that, Jason. The Dragon Naturally Speaking was on. If I was watching this tomorrow, I'd want to see it open and trade positive. If it started trading positive, I'd immediately put my stop at today's open or close, because if it comes down through there, there's profit taking. But I'd then buy it back if it came back up through there. Oh, Diana, they're all over the place. I think if you go to our website, yeah, we've even got the formulas for them. What is a best friend? A best friend is a doji followed by a gap up. Doji followed by a gap up is your best friend. The reason for that is not only are the probabilities that you're going to be in an uptrend are extremely strong, but the result of that uptrend is going to be very strong. Yeah, I forget which ones are the. Was Kara? Is that one of the cannabis? Uh, oh, I thought Mara was I thought that was more of a Bitcoin. Whoops. We're watching Mara to see if once it's now done a spinning top right here off the 50, start trading that positive. Okay. All right. I guess Rick, go ahead and do the double line. And in 3.2 seconds, do another double line. All right. We're gonna be late, but we'll get as many done as we can. When you put a stop in, do you use the bid ask? No, I just the trade price. If I'm putting a stop in, yeah, it's a stop, not a stop limit. It's just a stop. So that as soon as it hits that level, it turns into a market order. Who's saying trader trend or trend trader? I make it a rule that if I've owned something that had a big price move, two things are going to happen. Either they're going to start taking profits. So if it opens lower the next day, I take my profits along with them. But then I put my buy stop right back at the close. Because if they open it lower, take profits, and then come back up through there, obviously the bulls are still there. Do you ever look at moving average ribbons? No. The only reason I'm looking at the moving averages is because every major money manager in the world is making their decisions based upon the moving averages. Candlesticks tell you exactly what those decisions are at those levels. So it's not because we're using moving averages because they're beneficial. We're using the moving averages to see what everybody else is doing at those levels. Same thing with Fibonacci retracement numbers. We don't use Fibonacci retracement numbers. We use the signals as our number one criteria. But if they correlate with a Fibonacci retracement pullback, yeah, then we know if we see a buy signal at that level, that's where they're reversing it. That improved probabilities, that's a good place to be buying. ARLZ, yeah, J-hook pattern setup with a little booster behind it. The booster was that they were taking it down and they turned around and brought it back up. You could be a buyer of this one on positive trading. So these are the type of things that we're going to be looking for, or show people how to look for those so that you know you're looking for stuff that have high probability opens the next day. So right now, at this point, if you're long, it has to stay above the T-line. You saw where it failed at the 50 and pulled back. Now it needs to come back up and try to get through the 50 to stay in it. If it starts selling off from here, I'd close it out. That means it's not going anywhere. Microsoft is usually not a very good trader because of the institutional trading. But if you like Microsoft, you stay long as it stays above the T-line. Delta, nice kicker type signal. Expect wave 3. They gapped right through this level after a kicker type Morningstar signal off the 34. PayPal, all you can do here is stay long, but you want to watch this, kind of this level right in here. You want to see it break out. TNA broke out. Stay long until you see a sell signal. QGEN, nothing. You're sideways. You don't have any strong buy signal, even though you have a little left-right combo. I wouldn't play with this one until it breaks out, let's say through the 3350 area out of this congestion. So this is another benefit of the analyzing the charts. Which way is this going? Right now it's going sideways, which means I would take my money and go someplace else until there was an analyzable pattern to it. AMD, another bobble breakout setup. If you're long, you can stay long. If you didn't take profits when it hit the first resistance level, you can see that they did a piercing signal right here at the off the T line. If I was going to be a buyer, I'd have a buy stop just above the 200, telling me that it broke out through that level. CYH, big breakout. This one I'd be more apt to buy. Remember, there's your best friend. Doji gap up. And where did it gap up through? This whole resistance level. That tells you there's a new dynamic. The first target is filling this gap, which would give you some running room as far as being positive. And then your next potential target is up here at the 200. Stay long, J-hook pattern on ECA, Morningstar signal, scoop pattern breakout. There's your J-hook pattern. Wave 1, wave 3 should be the same magnitude. Las Vegas Sands, another one that bounced right off the 50. This is why we want to see where everybody else is buying. There's your Doji gap up best friend. Expect your next target to be coming back up into that trend trajectory. Finish line, same scenario. Kind of bounced off the 200. Morningstar signal. Get ready for a J-hook pattern on this one. Good breakout on a slow curve. Left-right combo off the 50. Yes, you can stay long on this one until you see a sell signal. TGTX, good breakout. Morningstar signal. The best you can do is watch for a 45-degree to come off of here. CVM, another nice slow curve breakout. Just make sure your volume is pretty strong on a $2 stock. Baba, you can see where the resistance level is. You're still above the T line. If it closes below the T line, it's coming back down to the bottom of the channel. You need to see it get up through that resistance level pretty quick. AVGO, nothing here either. You're stuck sideways. If you were short, you stay short. If it opens positive tomorrow, you cover your short position. You can pretty much assume you're in a sideways trend. KTOS, another steady eddy uptrend. Let's see. If you can pretty much draw a parallel line between the tops and the bottoms, that tells you got a trend. So more than likely, you can be buying this one on positive trading because you do have buy signals with the expectation they're going to come back up to the top of the trend channel. I don't know whether weed comes up over here. No, it doesn't. CF, steady eddy, morning or kind of a Morningstar scoop type pattern. If you're long, you stay long. If you held it through this, but I would have been out. If I got out, you can always buy it back on positive trading tomorrow. ALGT, there's your bullish flutter kicker. Strong signal. You know your next target is at least coming up to the top of the trend channel. Do you buy NVIDIA now? Chicken Hawk, I now live 20 minutes north of Pittsburgh, Pennsylvania. No video. Yes, you can buy this one if it opens positive tomorrow. If it opens lower, yep. If it opens lower, then it's kind of stuck in here. But if it opens positive, you probably got a doji sandwich breakout. Micron, nothing. Sideways, I wouldn't be long or short this one. So again, the benefit of candlestick analysis is you can see when the trends are starting. You had a best friend signal on this one. If you're long, you stay long. If you're looking to go long, put your buy stop right here. If it comes up through there, you know your next up leg is starting. But not only do the candlestick charts tell you when to get into a trade, but it also tells you when to stay out of something that really doesn't have any influential bullish or bearish movement to it. SRPT, another one you can buy if you like it on positive trading tomorrow, telling you there's going to be a doji sandwich breakout. OLED, I'll get these off of here. Be ready to buy this one on positive trading. Also right here, kind of at the breakout level. This is what you call your double doji. Notice the consolidation was 2 indecisive trading days. Because they weren't selling it off, the bulls took control again. Yeah, Watt not doing too much. So you do have kind of a wedge formation setting up. You can always wait for the breakout one way or the other. IPGP, all you can do is stay long on this one. Did we just look at that one? Almost looks the same. CarMax, another J-hook pattern supporting right on the 50. You can buy this one on positive trading tomorrow with the expectation they're going to take it back up and test the high. Wave 1, wave 3 would take you right up about that level. Oracle, not anything real exciting. You're still in this downtrending channel. If you're long, you can stay long. You just want to watch to see what it does once it gets to this level. It's not a very exciting one to trade because of its institutional trading. PetMed, just stay long. RES. Uh-oh. Nothing. If you were short, you would have covered your short today on a positive bullish harami, but you can see what you got here. Very slow sideways. That'd be someplace else. If you're short this one, you stay short. If I was short this one, I'd have my buy stop just above today's high. Right now, there's no strength. Oh, you said that. Yes, stay short. Weatherford, slow uptrend. You want to see what it does once it gets to the 200. It's trying to get there. DHI, you can see the slow, steady uptrend. If you came out yesterday, which you should have, today it opened, did a bullish harami. You can always buy it back if it opens positive tomorrow. GE, you can buy this one. You're not going to make a whole heck of a lot of money with it. It is in an uptrend, but you're running out of steam on your stochastics. If you're long, you stay long, but it's not a very good trader. AMD we did. SSC, you can get ready to buy this one. Another one, you want to make sure it kind of gets through this downtrending channel. XNet, all right, please do, Chicken Hawk. I still think I've got your little balancing hummingbird here around here somewhere. Okay. Watt in the wedge. I'm going to try Kodak one more time. There we go. So this is a big breakout. Again, when it got up here, look how far away you were from the T-line. You would have flipped to your 10-minute chart. Glog, another one that if you had been short. So if I see something like this, this is where you can put your Fibonacci retracement numbers on. Not there yet. But look how this one started. Get rid of that. Left-right combo, followed by a bullish doji sandwich breaking out. How long do you stay long here? Notice what happened up here in the overbought area. Doji, doji, spinning top, hammer. It was time to come out right here. Because that told you they weren't taking it up anymore. You can always buy it back if it comes back up through the T-line after the buy signal. NVAX. Here's a perfect example of if you've got a big, huge move like this and it opens lower, take your profits. You can always buy it back when it comes back up through the previous day's close or the high. I think we did ARZL. Slumberger. Just stay long. Notice where it broke out. Your best friend signal up through the 200. You just stay long. Now, if you're long, you have your sell stop, protective stop at today's open. If it comes down through there, that's the profit taking starting. Red Robin, where did I see them in the news? Something about whether, I guess they are cutting back on their bus boys or something. Be great when you go to a restaurant and you have to bus your own dishes after you eat. Red Robin, kind of a J-hook pattern. Next likely target could be up at the 200-day moving average. Whoops. BMW, nothing wildly exciting, just a nice steady uptrend. You stay with it. Taco, nothing yet. This is why on something like this, you want to see bullish confirmation. The next day, a bearish Harame told you they weren't breaking out. If I see a big move and it pulls back, you could be buying here, but you should have been back out here. I usually wait for them to get back up above the high of the previous trading, telling me there's new strength in it. TLT, these the short or is this the long bonds? Bond prices going down, meaning yields are going up a little bit. That's why the banks are picking up steam. See, did we do AVGO? Yeah, sideways. I'd be someplace else. SQM, stay long on this one. Nice steady uptrend. Is there going to be an oversupply? Oh, is there going to be an oversupply? Then the evil Monsanto can take over. That's right. I doubt it. I bet you people can keep smoking it as fast as they can grow it. I never did it. I think I did it a couple of times, but I was in college. I was drunk enough that I didn't feel the reaction. And I got to the point that I felt I was probably stupid enough versus putting something in my head that would make me think less clearly. OMI, nice fry pan bottom. You can stay Stay long on this one. I doubt if I can get the, let's see, A, B, C, F, F. Nah, not going to come up over here. I usually just do a stop. So as soon as it hits the level, I want to be out of it right away. If you're back in MRTX, you stay long. If you got out of it, it would have been a toughie to get in. Now, there's a lot of times where you look at a chart and say, all right, is this the best place to get back in? Or am I better off finding something where the probabilities are much greater in my favor? FCAU, stay long on this one. Put your stop at today's open as a safety stop. WIN, that's a toughie. That's not a great looking chart. You can see you don't have a big percentage move in this one. I'd probably be someplace else. Let's see, is that IBCC? LBCC? That's a wedge. You got to wait for it to break out one way or the other. Diana, I don't trade the weekly options that much. Now, we've got the option trading room, and you get a lot more information on different strategies in there. We set that up separately so that the terminology that people use in option trading weren't confusing people in the regular trading room. But that's a better question to ask over there. I'm usually buying monthly calls only because I don't have the time to watch the shorter term trades because I got so many other things going on during the day. Medine, you can set up your universe of stocks that you want to look for. I don't know how you do it over in TOS. I use Metastock and TC2000 to do my scanning, but there are ways you can keep the institutional type stocks out of your scans. Oh, I didn't finish XNet. All you can do right now is stay long on this as long as it stays above the T line. You're in the overbought area. I would put a safety stop below the lows of today and yesterday. The rationale being if it came back down through there, it's usually probably coming back down to test the T line. FEYE, FireEye, nothing to do here except stay long as it stays above the T line. Dean Foods. Dean Foods I always liked because I probably told everybody, I can't remember whether it was 2 or 3 years ago when we were up at the lake doing the private training sessions. Dean Foods had gone from 12 to 17 over like a 3-week period, made good profits, and then sold it on the first sell signals. And then over the next few weeks, it dropped right back down to 12 again. And while we were up there for one of the training sessions, there's 5 or 6 of us watching the screens. There was a bullish signal for Dean Food. So I bought some and everybody else bought some. And I think either the next day or the day after that, they announced earnings and it popped right back up to 17. So everybody there was happy because it basically paid for their training while they were sitting there. I will do that, Chicken Hawk. Oops. Yeah, maybe I didn't inhale. Yeah. But I can't even smoke a cigarette. So, went to a concert one and couldn't see the stage. Couldn't put it into. Yeah, I'm kind of embarrassed to mention that I'm graduated from Cornell now that they've got the crying rooms and the safe spaces. MTOR, nothing. Wouldn't be long or short. Goog, just stay long as it stays above the T line. Just spoke in the cars. In the, oh, an OMI. You can't tell. Yeah, it probably has the prospects of coming up through this area, but it might take quite a few weeks. But if it went from here to here, that's a 35% upside. So it's probably going to be a longer term, but there's a lot of times, oh, this is the alternative harvest, and for some reason, it's not coming up today. So, Rite Aid, another slow curve, expected to come up to the 200-day moving average. Oh, that's right. Was that Long Island iced tea? Yes. When they announced that, and I was telling the chat room the other day that when I was SOS trading back in Houston, and back in about year 2000, the company, I think it was KTEL, you would always see the advertisements for KTEL on TV that if you paid 1 penny for the first record, they would send you X number of records after that. And it traded for $6 for years. Then one day they came out and announced that they were selling records on the internet. And in 3 days, it went from 6 to 60. So that's kind of the enthusiasm that's happening right now with the Bitcoin. Yep. I remember the Girl Scout that sat up her table outside one of the stores and sold 3 times the amount they normally sell. Let's see, Harry. Let me see if I can get that one up over here. Oh, Liberty. That big left-right combo today said to stay in it or get back in it as long as it stays above the T line. AEO, another one you can be buying. Notice how it's bounced up with a bullish Harami, Doji Harami confirmation. You can get ready to buy this one. Wave 1, wave 2, looking for wave 3. Are they closed Monday? If the market's closed, no, we won't be doing anything. Trox, nothing great. You can be buying this one on positive trading tomorrow. It needs to get through the 34, and look for it to go to the 50. Okay, we're closed Monday. I didn't know that. I'll throw an extra log on the fire. Oh, is that right? Chicken Hawk? Yeah, that I've moved up to the Woodlands. All right, one more. Finish line. Didn't we do that one? nice J-hook pattern after a morning star signal. You can be buying this one. And Devin, be ready to buy this one if it comes up through today's high. That little scoop type pattern tells you the next wave will be in progress. Okay, making some good money already. The good money that's being made is still coming off the different candlestick signals and patterns, especially the patterns. So this is why knowing what your patterns are telling you puts you in positions where you've got that big trade prospect. So you've got two things going for you on a pattern. One, the probabilities are that it's going in the right direction. And two, you've got the prospects of making bigger profits than just merely a slow uptrending stock. So with that, everybody have a good evening. We will see you bright and early in the chat room tomorrow. We'll see you then.